Good morning. My name is Marian A. Alipudin, one of your students from MBA 104. Today, I will be discussing the introduction to financial management. What are we going to learn at the end of this lesson? I will explain the importance and value of the following: financial management, areas of finance, functional areas of financial management, organization of the financial function, responsibilities of the finance manager, corporate governance, goals of the firm, and the objective of the financial management. What is financial management? This is an effective and efficient management of money in order to accomplish the objective of the business. This is also the planning, organizing, directing, and controlling the financial activities of the business. And it is the process of putting the available funds to the best advantage from the short and long term point of view. It is also concerned with the raising of the financial resources and effective utilization of funds in order to achieve the business objectives. We do also have finance. It deals with the study of investments such as money, banking, credit, investments, assets and liabilities that makes up the financial system. It is also the science of money management and the study of investment. What is business finance? It is the practice and management of using the information in a company's financial statements to make strategic decisions in order to meet the business objectives. Business finance uses the information to help manage the money and make the operations more profitable. This also concerns with the acquisition and conservation of the capital funds and meeting the financial needs and overall objectives. Now, we will discuss the areas of finance. What is personal finance? It involves in paying for loans or debt obligation of an individual. This may include paying education, financing durable goods such as appliances, consumer electronics, furnitures, cars, insurance, and investing in saving money for retirement. We do also have public finance, the identification of required expenditure for a public sector entity. It describes the sovereign state, subnational entities, and related to public entities. Third, we do have corporate finance. It deals with the sources of funding and capital structure of corporation. The scope includes the business valuation and investment management. It is also the action that managers take to increase the value of the business to the shareholders. We do have portfolio and investment management. What is portfolio management? This is the art of science of making decisions about investment mix and policy, matching investments objectives. It determines the strength, weakness, opportunity, threats in the choice of debt versus equity, growth versus safety, and other trade-offs in the attempt to maximize the return despite of the risk. What is investment management? This is the buying and selling of investment within a portfolio. It includes banking and budgeting duties as well as taxes. Another areas of finance is the financial markets. So this is everything coming from stocks and bonds market. So what is stocks? This is a type of security that signifies ownership in a corporation and represents a claim on part of the corporation's assets and earnings. For bonds, this is a fixed income investment in which an investor loans money to an entity like corporate or any government sectors, which borrows the funds for a defined or definite period of time at a variable or fixed interest rate. We do also have primary and second market. What is primary market? This is where securities are created, It's in the market firms, or it's in the market that firms sell new stocks and bonds to the public for the first time. This is also known for IPO, or initial public offering. We do have second market. This is where investors buy and sell securities they already own. We have capital and money markets. Capital market refers to the activities that gathers funds from some entities and make them available to other entities needing funds. They normally known for fixed income and securities. For money markets, the trade in short-term loans between banks and other financial institutions. They are also normally known for certificate of deposits, commercial papers, repos, asset-backed securities, and etc. So if there would be a financial markets, there would be also called institution. So they are the intermediaries that helps make the transfer of funds between business and savers. So they are also known as brokers or agents. Moving forward, let's discuss the functional areas of financial management. Determining the financial needs. The funds are needed to meet the promotional expenses, fixed and working capital needs. Selecting the sources of funds. So this selection of suitable source for the working capital. Financial analysis and interpretation. So the profitability, liquidity, and position is a must to reach a certain conclusion. The cost volume profit analysis. So this is also a must to know the behavior of the cost. So the cost comprises of fixed, variable, and semi-variable. It is also an important decision for the production and profit. Next, we do have capital budgeting. So this is for the process of making investment decision and capital expenditures, which is expected to receive over a period of time exceeding 1 year. Working capital management. This is also a part of the business capital, which requires for financing short-term or current assets. Profit planning and control. It influences the declaration of dividends, surplus, and taxation. Lastly, we do have dividend policy. So, the magnitude and trend of earnings, desire and type of shareholders, future requirements of the business, government's economic policy, and taxation. Next, we do have organization of finance function. We do have investment decision. So intelligently allocate capital to long-term assets to get the maximum yield in the future. It is also the usage of funds which are obtained by selling the assets which become less profitable and less productive. We do also have financial decision. So this is related to raising of finance from various resources, which will depend upon decision on the type of source, period of financing, cost of financing, and returns. So this is a wise decision about when, where, and how should the business acquire funds. So the funds can be acquired through many ways. A correct ratio of an equity and debt has to be maintained. Third, we do also have dividend decision. So this is a policy that the management formulates in regards to the earnings for distribution of dividends to the shareholder. It determines the division of earnings between payment to shareholders and retained earnings. So this is also a decision wherein to decide whether to distribute all the profits to the shareholder or retain all profits or distribute part of the profits to the shareholder and retain the other half in the business. We do also have the roles of the financial management. We do have financial decision. This is to help the individual or business to achieve their financial objectives. For financial planning, this is to help in making sensible decision about money to achieve the goals. The proper use of funds. So this is to ensure the proper liquidity of the funds. Acquisition of funds. So this is to help finding the available sources at the time period for which they are needed. Improve the profitability. So this is to ensure the increase of the profit. Increase the value of the business. So this is to help improve the business value through public's expectation of the business future earnings. And lastly, to promote savings of the money. So aside from the role of the financial management, the responsibilities of the financial manager or finance manager. So they are collecting, interpreting, and reviewing financial information, predicting future financial trends, reporting to management and stakeholders, and providing advice how the company and future business decisions might be impacted. Producing financial reports related to budgets, account payables, account receivables, expenses, and etc. They are also developing long-term business plans based on these reports, reviewing, monitoring, and managing budgets, developing strategies that work to minimize financial risk, and analyzing market trends and competitors. We do also have corporate governance. So this is a system of rules, practice, and process by which a company is directed and controlled, balancing the interests of a company's making stakeholders, which includes shareholders, management, customers, suppliers, financier, government, and community. Corporate governance provides the concept for attaining company's objectives from action plans and internal controls to performance measurement and corporate disclosure. What are the goals of the firm? First, we do have value creation, or these are the earnings after taxes. This is to create and deliver value in an efficient way to generate profit after cost. So, creating value for the customers purchasing for products and services, and on the other hand, creating value for shareholders. They want to see their stake appreciate in value. Next, we do have earnings per share. This is a portion of the company's profit allocated to each outstanding shares of common stocks. It also serves as an indicator of the business profitability. It is considered to be the single most popular, widely used financial performance benchmark of all. Third, we do have corporate social responsibility or CSR. So, the business initiative to access and take responsibility for the company's effect on the environmental protection groups. It is also known as corporate citizenship, which involves incurring short term costs that do not provide immediate financial benefits to the company, but instead to promote positive social and environmental change. We do also have the For the stakeholders, these are the person, group, or organization that has interest or concern in an organization. It affects be affected by the organization's actions, objectives, and policies. We do also have sustainability. So this is a process by which the companies manage their financial, social, and environmental risk, obligation, and opportunities. The resiliency over time, which business can survive disturbance because they are jointly connected to a healthy economic, social, and environmental. So the three or the triple bottom line consists of people, profit, and planet. Our last topic for today would be the objective of the financial management. We do have profit maximization. So this is the ability to achieve maximum profit with low operating expense. So this is to determine the best output and price levels in order to maximize return. Next, we do have wealth maximization. This is the concept of increasing the value of business in order to increase the value of shares held by the stockholders. So this is also to increase the current net value of the business or the shareholders' capital gains with the objective of bringing in the highest possible return. To summarize what we have discussed, financial management plays an important role in an organization or business to meet the objectives, which is to maximize the wealth and profit of the stakeholder. Financial managers helps the organization or business objectives through their expertise. And it is also important to know how that aside from maximizing the wealth and profit, the social, economic, and environmental are playing a significant role in the business to promote the sustainability of the business. I hope you also enjoy the first topic or the topic that we had discussed, which is the introduction to financial management. Thank you.